The Dow Jones Industrial Average, known as the Dow, is a stock market index that tracks the value of 30 large publicly owned companies based in the United States. This index tracks how these large companies have traded in the stock market during various periods of time. The Dow is one of the most watched stock indexes in the world, containing of companies like Apple, Microsoft, McDonald's, Coca-Cola, Nike, and Disney. The companies that are part of the Dow Jones Industrial Average have changed over time. In fact, there have been 52 times instances of changes to the list of companies since Dow's inception. Of the companies that appear on the Dow Jones Industrial Average, the company General Electric, ticker GE, has the longest continuous presence on the index, beginning in 1907. But General Electric's presence ended in 2018 when the company was dropped from Dow Jones list. The Dow is the second oldest US market index after the Dow Jones Transportation Average. It was created by Wall Street Journal editor and Dow Jones and Company co-founder Charles Dow. There are several exchange-traded funds that follow the Dow Jones Industrial Average, including with short or leverage strategies. But what does it mean when you hear the Dow has ended or closed at 26,000 points? Well, let me explain. When the Dow was first put together, it was calculated by adding the stock prices for the 30 companies that were part of the index. In other words, you could add the prices of those companies, and its grand total would be then how much the Dow Jones Industrial Average was in points as of that day. However, over time, and as some stock underwent structural changes such as stock splits or spin-offs, the formula to calculate the Dow changed. Nowadays, to calculate the Dow, the sum of the prices of all 30 stocks is divided by what is known as the Dow divisor. The divisor is adjusted in case of the stock splits, spin-offs, or similar structural changes to ensure that such events do not in themselves alter the numerical value of the Dow Jones Industrial Average. The present divisor, after many adjustments, is less than 1. That means that the Dow Jones Industrial Average Index is currently larger than the sum total of the prices for those companies that form this index. How has the Dow performed over time? That's a great question. Over the past 50 years, the Dow has grown by a remarkable 2,600%. That is an average growth of over 50% per year. But more recently, and over the past 10 years, between 2009 to the end of the year of 2018, the Dow Jones Industrial Average has grown approximately 158%. That means if you had invested $10,000 in Dow through a low-cost exchange-traded fund, your money would have grown remarkably by an average of over 15% per year, leaving you with over $25,000 in your bank account. Not bad for basically a simple invest and hold strategy and some limited knowledge of the stock market. That is why one should make sure to take advantage of the stock market as a tremendous wealth generating tool. I would certainly encourage you to consider to invest in a low-cost exchange-traded funds or ETFs that mimics the performance of the Dow Jones Industrial Average. One of such ETFs is known as SPDR Dow Jones Industrial Average ETF, ticker symbol DIA. It currently has a dividend yield of 2.05%. In terms of its price value, this exchange-traded fund has grown by approximately 50% over the past 5 years, which is a decent growth average of 10% per year. Of course, before you invest in stock market, you should ensure to do your own research, determine your risk tolerance, and then make your own decision. In the next video, I will introduce some leverage index funds that would allow you to take advantage of the Dow Jones at a whole new level. I hope this video was beneficial for you. Please like this video if you feel that you learned something of value. then leave me a comment below and tell me which index funds you're currently monitoring or investing in.